Are short-term rentals still worth investing in for 2025? With regulatory changes, shifting traveler preferences, and economic uncertainty, it's a question more and more investors are asking. And honestly, I get it. I've had the same conversation with clients all over Arizona. So today, I'm breaking it all down for you. Like you're sitting across the table from me having a coffee. We're diving into the current STR market conditions, updates on Arizona laws, what returns really look like today, and what smart investors like you need to focus on to win. Hey there, I'm Stacey Miller, and I work every day with real estate investors buying, optimizing, and exiting short-term rentals across Arizona. If you're looking for real estate strategies backed by market data and experience, not just hype, then you're in the right place. Each week we dig into actual tools, trends, and tactics that drive success. So if you're serious about STRs, go ahead and hit that subscribe button. Let's build your portfolio the smart way. All right, let's talk about where we are right now. As of 2025, short-term rentals aren't going anywhere. According to AirDNA, national occupancy rates are still comfortably between 60 and 65%, and in some areas of Arizona like Scottsdale, we're pushing even higher. Average daily rates are healthy, guest demand is solid, and STRs in lifestyle-driven markets are still outperforming. Sedona, for example, is a perfect case. Hotels are limited, zoning for new development is strict, and the natural beauty draws tourists year-round. If you can get a property there and do it right, the upside is huge. Flagstaff is another strong performer, especially during ski season and university events. The key is identifying these patterns. Also, don't underestimate secondary markets. Places like Prescott and Payson are seeing year-over-year growth in bookings. With more people working remotely, travelers are exploring smaller, quieter areas they wouldn't have considered pre-COVID. These markets offer lower price points and less regulations, which can mean higher margins and less stress. And then there's Phoenix and Tucson, massive metro areas with lots of opportunity, especially in pockets near major attractions or hospitals. The demand may be more seasonal, but if you combine short-term with mid-term rentals, you can stay booked year-round. But here's the reality check. This isn't 2020 anymore. Demand isn't just exploding across the board. Instead, we're seeing a shift. Mediocre properties are losing traction while top-performing listings continue to thrive. The game now is quality, experience, and data-driven decision-making. Your listing needs to offer more than just a bed. It needs to offer value, comfort, and a seamless guest experience. Now, let's shift gears to something a lot of investors are worried about: regulations. Yes, Arizona passed Senate Bill 1168, giving cities more control over STRs. And yes, cities like Scottsdale and Sedona have taken action, but here's the truth. These regulations are not bans, they're filters. They're designed to weed out the people who don't take STR seriously. Scottsdale now requires STR operators to register, designate a local contact, post certain notices inside the unit, and follow occupancy limits. Violations can lead to fines or suspensions, and enforcement has gotten tighter. Scottsdale has a dedicated STR team now, so you really need to stay sharp. But the process is manageable. You can apply online, get it set up with automated alerts, and stay in compliance using tools like Host Compliance, which integrates with many Arizona municipalities. Noise monitoring with tools like Minute or Noise Aware is not only smart, it's quickly becoming expected. Guests don't mind when it's done right, and neighbors feel more at ease. And let's be real, many of your competitors won't follow these rules. They'll get fined, flagged, or shut down. That's your opportunity. Play the long game, stay compliant, and position yourself as a premium host. That's what makes a sustainable STR business in 2025. Now, let's get into the money. Not just gross revenue, but real financial performance. Savvy investors in 2025 are laser focused on three things: tax strategy, financing, and accurate forecasting. And the reality is, you need to get all three things right to win in this market. Let's start with taxes. STRs are often considered active businesses if you materially participate. That opens doors for huge deductions. Think depreciation, repairs, cleaning, internet, furnishings, utilities, even mileage. You can write off part of your home office if you self-manage. And here's the kicker. Unlike long-term rentals, you might qualify to offset these losses against W-2 income depending on how you structure the business. You can also do cost segregation studies to accelerate depreciation. Yes, it costs a few thousand up front, but the tax savings can be tens of thousands of dollars in the first few years. If you're serious about STRs, talk to a CPA who knows real estate. It's a game changer. Next, let's talk financing. Traditional loans are harder to qualify if you're scaling. That's where DSCR loans shine. Instead of looking at your personal debt to income ratio, lenders focus on the income potential of the property. If your STR earns more than the monthly mortgage, usually by 20 to 25%, you'll qualify. It's fast, flexible, and perfect for investors who are full-time or self-employed. Portfolio loans and bank statement loans are great too, especially if you're buying through an LLC or have multiple properties. Just work with a lender who knows STRs. That's the key. Lastly, forecasting. Before you buy anything, you should know what's the average occupancy in the zip code? How does it fluctuate by season? What's the average daily rate for comparable homes? How many nights do I need to break even? Tools like AirDNA, Rabu, and Mashvisor will give you this info. You don't want to guess. You want to underwrite like a pro. Now, let's talk about the economy because that's on everybody's minds. Yes, interest rates are higher. Yes, inflation is still a factor, but that's also keeping inventory low. Most homeowners aren't selling. So when you find a good deal, especially ones that's already operating as an STR, jump on it. Guests are also changing. They're not just weekend warriors anymore. Families are traveling with kids, digital nomads are booking month-long stays, remote teams are doing retreats. STRs serve all these better than hotels, and don't ignore amenities. High-speed internet, comfortable workspaces, blackout curtains, quality coffee setups. These are the little things that justify premium nightly rates. The best hosts are making 20 to 30% more just by creating a better experience. And like I mentioned earlier, the hybrid strategy is clutch. Midterm rentals, 30+ day stays, bring in stable income and lower your turnover costs. If you can blend STRs and MTRs, you'll smooth out your cash flow year-round and stand out in competitive markets. Listen, this business isn't just about getting bookings anymore. It's about creating a repeatable system that scales. Design matters. This is not optional. Listings that pop get clicks, and clicks lead to bookings. Think about your ideal guest. What vibe are they looking for? Boho chic? Modern farmhouse? Luxury desert escape? Make it unforgettable. Revenue management. You should be adjusting price daily, manually or with software. Price Labs, Beyond, and Wheelhouse use real-time data to maximize revenue. This can boost your income by 10 to 20% over static pricing. Automation. Your tech stack should handle 80% of your operations. Hospitable for guest messaging, turnover cleaning coordination, smart locks with unique codes, and even automated review requests. You should only be stepping in when something unusual pops up. Now, guest experience, go beyond the basics. Provide a digital guest book. Include a welcome snack or local coffee. Add things like yoga mats, streaming services, board games. These things cost $100 to $200 upfront and pay back tenfold in 5-star reviews. Now, let's talk about maintenance and reviews. Schedule deep cleans quarterly. Don't let small problems pile up and respond to every review, good or bad. Reviews impact your search ranking and guest trusts. So, are STRs still worth it in 2025? Absolutely, if you go in with a plan. You need to be strategic, proactive, and committed. But if you are, the returns are still excellent. And unlike stocks or crypto, you control this asset. You create the experience, you set the systems, and you decide how it performs. If this video gave you some clarity or motivation, like and subscribe. Drop a comment, let me know what markets you're exploring or what's holding you back. And if you want help running the numbers, navigating compliance, or building a scalable STR game plan in Arizona, let's talk. I work with investors just like you every day. Catch you next week.